Hey everyone, Jonathan Gornston here, your commercial insider from Leonard Commercial. It's been a little bit of we've taken a little bit of a break, but now we're back at it. We got a lineup of guests. I got a very special guest coming at you today. I got Raymond Wong from the Altus Group. He's currently a vice president of data operations, which will give us a little bit overview of what's going on in the market. He has a very analytical view of what's actually going on in the market instead of just a broker point of view. He's also a software and data specialist, so that will also help our overview of the whole market. Raymond, why don't we jump right into it? First of all, thank you for taking the time to join me and give your insight on what you're seeing and some of the trades that you're seeing in the market. Why don't we start off with what's your general view of the industrial market currently?
Well, again, thank you for the invitation and joining the call, Jonathan. It's not a big secret that industrial is the hottest product in the market right now. There's not enough supply from both a tenant standpoint and an investor standpoint with
Right.
quality, and we're hitting at very low cap rates, and the availability rate in the GTA is at 1.3% when you factor in properties for sale. So I don't think it can get any tighter than that.
Right. What's your opinion on investor appetite, cap rates, how tight the market is, just in general?
Well, if you look at the overall new construction, typically in the GTA, Toronto hits between 10 and 13 million square feet construction. So right now, there's about 11 million square feet of construction going on, and typically for absorption, you're looking at between 11 to again 13 to 14 million square feet of absorption every year. So basically, the demand outstrips supply. So from a tenant standpoint, that you're looking at increased rents, and if you look at renewals, and also you're looking at increased sale prices because you're not just battling other tenants or other users for the space, but you're also for certain projects, you're also competing with investors and especially institutions in the marketplace. So from if you own real estate today, especially on the industrial side, there's a sizable gain to be had, and
Right.
you're looking to pick up that asset, expect to be prepared to pay for it in a way of a low cap rate. And we know that typically cap rates are between, I'm not sure what a normal market is for industrial. And normal back in, well, 10 years ago, the cap rates were between at best 5 to about 8%. Now you're dealing with prime tenant building anywhere from low 2% up to about 3.5%. So the market's definitely changed. And again, it's because of the sheer demand and of course the impact of e-commerce and logistics to the market.
Let's go on back to one of the first points you made. You made supply coming on the market. You talked about 11 million square feet coming on the market. Why don't we put that in perspective in terms of geographic? Is that all of Ontario? Is that Oshawa to Hamilton? Like that 11 million square feet, where is that coming on stream?
It's basically the GTA, so it goes from Burlington to Oshawa and up to Newmarket, right? So the challenge there is that, and we get this question all the time. What about Southwestern Ontario? And we're starting to see some demand trickle down in that. And the latest announcements by Amazon near the St. Thomas London market with new construction. So it's starting to have that impact because the GTA just can't service that area. And plus, for e-commerce companies such as Amazon, they have to be closer to the consumer.
Right.
And it's very hard based on the highway infrastructure to get product down there in a timely manner. Well, sorry, Jonathan. The other thing that to keep in mind is that one of the hottest regions that we've seen in the GTA is Durham, and they're around 2.2 million square feet. But the West continues to be the area of the largest growth, around 3.2 million square feet of under construction, followed by York Region or the North GTA. But Durham Region is really becoming a place for a little bit more way of affordability, if you can say that, for industrial.
Right.
But you definitely see stronger residential growth in that region as well.
I have to comment from even from dealing with my clients here at Leonard, we're seeing a lot of more clients migrate east. It's always been the ugly sister, let's say. Everyone always wanted to be west. Everyone wanted to talk about Mississauga, Brampton, Milton for to a certain extent. But now people are really starting to ask questions about Oshawa, Ajax, Scarborough, all those markets that are west of or east of the 404.
Yeah,
So it's great to see.
well, it was interesting about 5 to 7 years ago when there's first announcements of Scarborough Tapscott area building 500,000 square feet warehouse buildings that was never seen before. So I think that was the tip. But if you look at the infrastructure built up, especially with the highways and expansion, the 407 in the east, it's making more palatable for larger users to be out there. And the other issue that you're dealing with is labor.
Right.
And in Durham region, you didn't really have the same population densities. Now with affordability, you're getting sort of
Right.
a little bit more affordability in Durham region, especially compared to Mississauga or Oakville.
So I guess a question that a lot of my clients are asking, or a lot of other investors are looking for, what are investors actually looking for? Like you look at the data on a micro level, and I look at it on a more simple level on the deals that I'm doing, more of a tunnel vision. When you're exposed to the whole market from far east to the far west, what do you see that investors are looking for based on the information that you're getting?
It's all about property flexibility and changes because we've seen the cycles with industrial, especially older industrial in urban areas being converted into commercial residential, right? And it's dependent on the potential of the site, and that's why there's a little bit lower cap rate based on some buildings with expansion or redevelopment opportunities.
Right.
So with investors, they're looking at something, well, depending on their objective for short-term or long-term hold. If you're looking at long-term hold, that property can increase in value based on the changing uses or the densification uses. The same thing on the retail side. That it's interesting that for the GTA, the retail was number third in the way of investment transactions, and you wouldn't think of that just because of all the media and the news on the retail side.
Right.
But what retail has is the actual locations, and there's some investment there is speculative with other sort of higher invest use such as the mixed use, but there's also that possibility of changing some of that retail into e-commerce logistics, being closer to the population. So investors are looking for that flexibility and that increased return and the higher values and increased returns down the road. So they're not really looking sort of short term, but they're willing to pay a premium for medium and long term goals.
So let's go run with that point. Do you think retail is starting to become an opportunity?
Well, you know what? I think it started last year with the pandemic, right? And there's issues with closures and owners were sort of trying to hedge their bet to a certain extent. And for a while there was a lot more retail on the market, but it was not. It was based. There was a gap between buyer and seller expectations. So I think the pandemic pushed that gap narrower, and then we started to see an increase in retail velocity last year. Like remember, from 2020 to 2019, we had a drop in the GTA around 22%, but
Right.
retail only dropped by about 11%. The big hit was on the office side, where it dropped by 60%.
Right.
Right, so that's a big difference. I think you're right that there's opportunity there on the retail side, but at the same time, there's a little bit more risk there. So that's why we're seeing a lot of more private players getting into that marketplace, and they're speculating on the potential upside of some of those properties.
I guess over the last couple of months, we've really seen some major deals on the industrial side. Before this call, you and I were talking about the Katera deal. We were talking about the Artis Pyrite deal. Um, any comments around those particular deals or the sizes or anything that you see that was very unique about those particular deals?
Well, they're driving up that it reinforces that demand for institutional investment in that area, because anytime you get a chance to buy a portfolio of that artist REIT portfolio of about 28 properties and do it in one shot, and the total transaction comes out to about 750 million. You take that opportunity, even though you're paying a bit of a premium to do that, the amount of work it takes to get to acquire that type of asset over a amount of time is, it's a lot of work. So there's a opening of trying to get those type of acquisitions, as well as for everyone is trying to reassess their portfolio balance. And now's the time to do it, because there seems to be a lot of capital chasing assets in the marketplace right now.
Yeah, I've been in the business for about 10 years, and I don't even think I can name two transactions of that size over a 10-year period. There may have been one or two, but to acquire 2.8 million, sorry, 2.5 million square feet of industrial space in the GTA is very rare, and to do it in one scoop is very rare too. So there has to be some type of uniqueness to that deal,
Yep.
and hopefully that it looks like they paid a premium for that as well.
And plus, both of us know that industrial is not going away. So if
Right.
you look at the and especially e-commerce is going to dip a little bit when we get back in the sense of, post-pandemic normalcy, and some people will get back into some of the retail stores. But e-commerce, especially with the growth of grocery online shopping over the past 20 months, is going to continue to grow. And when you throw into the whole thing with dealing with reverse logistics, I think that's where Southwest Ontario is really going to benefit from the lower rents, and as well as the more availability of land compared to the GTA. And plus, you just don't need that just-in-time delivery for returns compared to delivery of product.
Let's go on to that point about reverse logistics. For some of our listeners, they may not know what that is. Why don't you talk a little bit about what is reverse logistics, and maybe some of the issues that companies are having with that?
Yeah, absolutely. So warehouses are built for, and the processes for the Amazons one direction, leaving the warehouse, not coming back to the warehouse.
Right.
So the challenge with it is that because they have to accommodate that, it adds between 5 and 7% of the cost to operate those buildings, right? So, and then once you get the product back, what do you do with it? Depending on the shape, do you have to repackage it? Do you send it back out to liquidators, or do you just send it to the dump? And unfortunately, that's where some of the products are going. And the other thing is, I think you've seen some of those TV shows whereby they sell a great big block of things from returns, and they just label it household goods.
Right.
So you pay $100 for it. I'm not sure what you're getting, but you get that whole box, right? So there's some of that. But unfortunately, that because the cost to do that is expensive and be able to process it, some of that is being thrown into a dump to the dump, which is causing waste. So now, especially with a few of the U.S. Sort of warehouse distribution users, they're looking at dedicated space and just deal with the returns and not interrupt the outward movement of product. So that's why I'm saying that there's demand for e-commerce one way, but also there's going to be demand for product going the other way. Because I think, especially our family, what we buy online is not really what we sort of anticipate once we get the product,
Right.
and we usually return it. And it's those type of returns that everyone is dealing with.
Yeah, like over the last, let's say, 15 months, like if I'm looking to buy a shirt and I'm not sure on the size, I'll order two or three,
Yeah.
and then take one, I'll send two back. Like that's kind of my behavior now, because one, time, I don't have time
Yep.
to get into a store, and two, you don't even know if it fits.
Yeah.
So it's kind of do it all in one shot and then send it back if it doesn't fit.
Yep.
Anyways, is there anything else you'd like to add? Anything else you see across Canada, or any opportunities that you think are coming down the pipeline that people should be aware of? We didn't really talk about other markets across Canada, between Calgary, Edmonton, Vancouver. Are you seeing anything unique about those particular markets?
Well, the nice thing is that the big markets, especially foreign players, are looking at is Vancouver and GTA, and both of them in the first quarter of this year compared to last year are up. Like GTA is up from 4 billion up to about 6.3 billion this year, and Vancouver is 2.4, 2.7. But again, it's upward movement, and Alberta sort of has its challenges. They're down a little bit, but if you look at Ottawa and Montreal, investment activity is really picking up, and for a national basis, we're at 16.8 in first quarter versus last year, and this year we're at 19.6 billion. And our year-to-date numbers, I think we might actually hit the second largest sort of investment activity in Canada since 2018 or 2019. So again, this is a far cry from a year ago where we're down about 22% of activity. So investors and are back with a vengeance, and that price gap between investors and owners has gotten a lot smaller. So I think that's why you're seeing a lot of activity and that overall confidence back in the marketplace that we're returning to normalcy. But at the same time, we know there's, especially the last few days, there's been a lot of discussions about that fourth wave,
Right.
whether or not that's going to slow down the economy. But for industrial, there might be a smaller dip, especially on the e-commerce side, and whether or not the government actually steps in with any type of subsidies or programs again. But I think industrial, to a certain extent, just because of if we go into a fourth wave, that e-commerce is still needed, will
Right.
weather the storm. So I really like this product, as well as the apartment product. I also see opportunities in the other sectors as well.
Okay, well, Ray, I want to say thank you for joining me on the Industrial Insider.
Great,
If
a
you
lot
have
of fun.
if you have any questions, please email me at jonathan@leonard.com, or give me a call at 416-471-0904. And thanks for tuning in to the Industrial Insider. Have a great day.
Thanks, Jonathan. Take care.
Have a good day.